You hear me, Greg? All right. Welcome, everyone. Welcome to Intro to Forex with Craig. I am Craig. I will be your host. If you can just chat it, type in a quick Y to let me know you can hear me okay. Everything is showing up fine on my end, audio-wise. So if you can type in a quick Y. Thank you, Michael. Thank you. Melvin. Okay. Thank you. Wonderful, wonderful. It's great to see all you here. Well, I guess virtually see all you here. Lavender, thank you. It's great to have all you here. We're going to spend about half an hour to 40 minutes together here and covering some topics regarding to the wonderful world of Forex trading. Okay. Now, I'm going to cover support and resistance. I've been asked to cover that topic tonight. And maybe, if we're lucky, we'll look at a trade on the Australian dollar here coming up. So first things first, welcome again. And I always like to start off my meetings by setting the proper expectations. And that is, Forex is a real trade, okay? No pun intended. It is a wonderful way to make additional money or even full-time money, if that's your goal. But it takes work. It takes discipline. This is not a get-rich-quick scheme. If you're here for get-rich-quick, you're in the wrong place, okay? I don't mean to be too brash about that, but that is really, really the case. If you think you're going to master trading in 1 week or 2 weeks or even 1 month, that is not a realistic goal. I like to set the expectations clearly up front. And oh, by the way, if any of you have a question as we go along, feel free to type them in, and I'll be sure to address them as we go along. But again, if trading was easy, the whole world would do it. So some of the things you need when you first start off is the proper education. That's what we can provide. It's very hard to pick up a book or go to a seminar and just go home and read it and become a successful trader. Very difficult. Some folks can do that. Most folks can't. Having someone experienced, like we have here at TPL Forex, looking over your shoulder, starting off with a demo account so there's no risk of loss, starting you off with the correct fundamentals. This is homework. This is study. This is hard work. And someone holding you accountable and can point out your strengths and your weaknesses and help you improve upon your weaknesses is crucial. That's what we do here every single day with our clients. If you need to talk to some clients, we'll be glad to give you referrals. We work every single day in the markets, as well as providing a live trading room environment where you can watch our traders trade live when you're learning. And then when you want to get into trading your own money, if you ever do, you can be in a live room environment where you're simply looking at the trade calls that we're making and follow along on your own account, okay? Now, make sure it's clear, we are not brokers. We cannot advise you on your financial planning. We cannot trade the money for you. We are strictly education that does provide a live room aspect. That's all we are, education, okay? Very clear for you to, very important for you to understand that. But the proper education is super, super important. I cannot, overstate that. I really can't. All righty. So again, thank you for being here tonight. And let's jump into support and resistance. This is a crucial, and I mean a crucial piece of proper technical analysis. Now, what is technical analysis? Well, technical analysis is looking at a chart very similar to this. This is the Australian dollar versus the Canadian dollar chart you're seeing right now. So, looking at a chart like this and understanding what all these candlesticks mean, that's the red and green bars here. Looking at these lines and understanding that it's a short term and a medium term and a long-term moving average. Looking at this indicator down here and understanding that's the MACD, the MACD, which stands for Moving Average Convergence Divergence. Understanding what all these things are and be able to interpret them to tell you exactly when to get into a trade and exactly when to get out. That's what we do. So looking at this chart right now, and in my opinion, it's a very simple chart, and I like it that way. It's a very simple and elegant chart that speaks directly to the heart of the strategies that we teach our students. Now, you will never hear us claim that, our strategies, our systems are 100% effective. If you ever hear that from somebody, please run, don't walk the other way, because they're lying to you. No system is 100% effective. Our system is highly effective, absolutely. My goal for my students is to get them into that 80 to 80% win ratio. But I've been trading for 20 plus years and I still have losing trades, absolutely. But I tell you what, I have more winning trades than losing trades. And that's the goal to being a consistent, sustainable trader. So I don't like my screen cluttered with 1,000,001 different indicators. I use these 4 indicators: long-term, short-term, and medium-term moving averages, and the MACD. That's it. But the concept of support and resistance is also crucially important to successful trading, in my opinion. Some folks don't think it is. In my opinion, support and resistance is very important because it tells you when to get into a trade. Okay, so let's dive right into it. And again, if you have any questions as we go along, feel free to type them in. I'll be sure to address them as we go along. So, support and resistance. Well, Forex, foreign exchange, is what's called a very trending market. And by that I mean you'll see long-term trends upwards on charts and long-term trends downwards. You will get periods where the trend is going just sideways, or I should say no trend, where it's just consolidating and moving sideways on us. But for the most part, Forex is a trending market. And thank goodness, because prices seek out historical levels time and time again. And I'll make that clear to you as we go along in this session here. Now, as a trend develops, let's use an uptrend here, for example. Prices rise and fall back, and so on. You rarely ever see, occasionally you will, but rarely ever see a straight move up or straight move down. Sometimes when we have big shocks to the market, you will see a very steep incline or a very steep decline. For example, a few days back, the Reserve Bank of Australia, which is the central bank in Australia, they lowered their central banking rate. And for reasons I won't get into now in this session, that sent a shockwave through the foreign exchange market. And the Australian dollar got super weak. And it was a really great trading environment because we saw some huge moves, 100 pips, 200 pip moves. Wonderful, wonderful trading environment if you know what to do, what to look for. Okay, let's get back to support and resistance. So, as these moves rise and as these moves fall, they create levels of support and resistance. So, here we have an up leg and a down leg and an up leg and a down leg and so forth. All part of an overall uptrend. Now, the peaks of this uptrend here, where we can start formulating where we're going to draw our lines of resistance. So you see the peaks here would be our first resistance line right here. This resistance line up here would be our second level of resistance. And the valleys or troughs, the valleys here is where we would draw our support lines. So understanding that and understanding where to draw those, we're going to dig a little deeper now. And of course, in a downtrend, it's the same thing. We have a downtrend, a down leg, an up leg, a down leg, an up leg. And at the peaks are resistance, and at the valleys are support. Now, here we have an example of an uptrend. So you notice the bars are trending upwards here, starting on the left-hand side of this example. And they hit a level, but they fall back down again. Okay, great. Oops, my computer was backing up there. Okay, they hit a level, and they fall back down again. Then they move back up again, and they break through this resistance level. Okay, fine. Then they don't come back down below that resistance level again. Okay, good. That's significant. We'll come back to that. And they rise up again to another level here, where they fall back down again. Then they finally break through that and rise up again. Now, this is crucially important to understand these levels, everyone, because these levels can help us identify the best entry points on a trade. Very, very important. Very, very important. And I'm going to show you some examples of that on a live chart. Now, important point here. Once resistance gets broken, it becomes support. For example, this line here originally was resistance, where this little R is here. But then later on, it got broken through by the bars, by the candlesticks. And you see the candlesticks can't get below this level anymore. So now what was resistance over here, the same exact line is now support, meaning the candlesticks can't, or the bars in this case, can't get below that line. And the price continues to move up to the next level of resistance. Falls back down, bounces off support, breaks through resistance, and sure enough, it becomes support. And we see that time and time and time again in a live environment. Very important. When resistance gets broken, it becomes support later on. When support gets broken, it becomes resistance later on. And that's very good for us because it helps us identify the best entry points for a buy and a sell. All right. Now, consolidation zones, also a very important concept when it comes to successful trading. Because when a trade or when a currency pair is consolidating, meaning that sideways movement, it's not trending up or it's not trending down, it's just the price is stuck in a range. It's stuck in between an upper range and a lower range, in a narrow range, and it's just moving sideways. We believe you should not be trading during that time. That's a great way to get whipped around on your trades and have a lot of losing trades. We don't want that. So we want to stay out of the market during those times of consolidation. And there's many ways to identify that. Now, these red circles here you're seeing on your screen, those are areas of consolidation that we would not be interested in trading because you see sideways movement there. Sideways movement for a significant period of time. In this first red circle, in the second red circle here, in the third red circle, and the fourth one. Now, the moves in between those circles. In the first circle, we broke out of it here to the upside. Okay, great. Second circle, we broke out to the upside again. Third circle, we broke out to the downside. Now we're talking. Now we're talking. Those breakout moves can be traded and traded with a very high level of probability for a successful trade. Now we're talking. Now we're starting to put some intelligent technical analysis behind our decision making. So here's what I mean where a price can consolidate or get stuck in a very narrow price range. So here we have our resistance line drawing along top of these bars here, and our support line drawn along the bottom. Okay, great. Now you'll notice some of the bars kind of poke through the top and even the bottom of our range here, our resistance line and our support line. That is okay. Drawing lines of support and resistance is more of an art than it is a science. You understand? We're trying to get the general move. The general sideways movement is what we're trying to identify. It doesn't have to be exactly spot on. We're trying to get the general moves of sideways movement. Coming down to the next one here. Here's another level of support and resistance. Again, we see that we're trying to get a general feel for the sideways movement. Fantastic. Okay, great. Well, sometimes that can pose a problem, though. Here's what I mean. Here, we have resistance and support very clearly identified. But then, you see the breakout happens to the downside here. We get a breakout below the support line. Okay, but wait a minute now. It turns all the way around and goes back up. So we like to call this a head fake, where it initially breaks out to one side and then immediately turns around, or soon after turns around and goes the other direction. So there, well, my goodness, Craig, how do you identify that? Well, that's where our other indicators come into play. Our job right now is simply to define our consolidation zone with resistance and support. Okay. Now, trend lines. Trend lines can also be a very important part of identifying when those trends are happening, and it helps us to identify the support and resistance levels. So here, we're identifying the highest point over a time frame. That's this red circle up the top here. Then we have some points down below here, where these lines act as support down here. Okay, great. Great. Now, a key to setting support and resistance is having as many touches as possible along the same level. Along the same level. In this case here, we have two near touches at the top and two near touches at the bottom. Okay. Wonderful. That helps me identify where I'm going to draw my lines of support and resistance. We keep moving down here. Here is an example of a trend line that we're drawing along the bottom of these candlesticks here, because we're clearly in an uptrend here. We are clearly in an uptrend here. Okay, fine. But what if the candlesticks either steepen or shorten down or turn the other way and go down? Can you draw a trend line in 2 steps? Absolutely, you can. Here we have an example of a trend line that's going all the way up, and then you finally get the candlesticks breaking through the trend line here. That's a great indicator that that upward trend has lost its steam, and now we're into some consolidation. So trend lines can be very, very helpful in identifying when that trend is losing its steam or over. Very important. Again, we're adding in intelligent tools to help us identify when to trade. So here's an example of where the trend actually steepens up. We draw our first trend line along the bottom here, but then the angle steepens. So sometimes you have to draw a line in 2 steps, like here. So we have our first line right here along the bottom, and then we have our second trend line steepening up, showing, okay, this trend is kind of taking off more to the upside, but then it finally gets a breakthrough of the candlesticks here, and now we're in consolidation. So trend lines can be a very big help to identify the trends and when they're over. Very, very important. All right. So that's kind of the basics of it. Let's look at some practical applications here on actual live charts. Let me move this down some. Now again, here we're looking at some live charts. And I'm going to be looking at the Australian dollar pairs because we have some major news coming out here in about 14 minutes on the Australian dollar. Their Reserve Bank, which is their central bank, the RBA, Reserve Bank of Australia, they are releasing kind of their state of the Australian economy. They have a report that they issue. It's called the RBA Monetary Policy Statement, where they're going to be talking about, hey, what's happening with unemployment in Australia? What's happening with interest rates in Australia? What's happening with job growth? What's happening with prices, trade deficits, energy prices? Just kind of the overall state of affairs of Australia for the last quarter. And they're going to be announcing that at 5:30 here Mountain Time. So I'll be able to go in there and read it and assess whether or not it's worth trading or not. Because if the RBA is very negative, that's going to have an immediate impact on the Australian dollar. If the RBA is very positive, well, that too will have a strong impact, and we'll see a move immediately on these charts. If they're kind of neutral, saying, oh, things are kind of okay, we're going to keep things as is, we're not going to raise rates, we're not going to lower rates, we're not going to do any changes to our monetary policy, then you probably won't see any reaction. But that's rarely the case. Rarely the case, okay? Now, you heard me mention earlier on this week, actually back on Tuesday, that the RBA did, in fact, cut rates. They cut interest rates in Australia across the board by about 0.25%, which doesn't sound like much, but in the world of central banking, that's a huge amount, a huge amount. And if you're looking at the charts now, you can see this big red candle down here. That is the Australian dollar getting much weaker, much weaker. You see it here on the Australian dollar, Canadian dollar. If I look at the Australian dollar, US dollar chart, look at that big move at the exact same time. As soon as that news was released that they were cutting rates, look what happened. And these are huge moves, folks, huge moves that you need to be paying attention to because we know in advance when these announcements are going to happen. We know in advance, we know exactly when they're going to happen, and we can use that knowledge to plan and then execute our trades. If you follow along here, look at the euro Australian dollar, same exact time. Now in this case, you see a big move up. But in this case, it's still the Aussie getting stronger. I'm sorry, getting weaker. But on this particular currency pair, it depends which currency is listed first as to whether or not the chart's going up or down. We have a base currency and the quote currency. We cover that in detail on Tuesday nights. So if you missed that, we have recordings and you can get them from us and we'll be glad to distribute that to you in email. If I look over here at the Aussie yen, look at that big move down there. So you see, at the same exact time, across 4 different currency pairs, we had big, huge moves based on one central bank making a move in their monetary policy. And that's the great thing about Forex trading. I mean, I can't guarantee that any of our students will ever make any money. Of course, that's our goal. That's what we strive for and work for every single day. But we can't promise that. Can't do that. What I can promise our students is that they will be extremely disciplined students. If I had to put a number on it, I would guess that they're going to be more well-informed than 95% of Americans as to what's happening on a macro and microeconomic standpoint, both domestically here at home and globally. Your knowledge as to what's happening and why it's happening will explode going through our program. And that's not just good for you as a trader, it's good for you as a your personal finances. Because I'm sure you've all heard on the news that the Federal Reserve did this, or the Federal Reserve did that, or Congress did this, or the President did that. And you may or may not have a deep understanding of it. Going through our program, you will have a deep understanding, and you will know exactly why things are happening and how to take advantage of it as a trader. And if you think this stuff is just all kind of, too complicated or pie in the sky, you're wrong. Because all of these things happening affect you every single day and your personal finances. There's a wonderful website you need to be aware of called Forex Factory. And it's a free website. You can go to it anytime, and I strongly suggest that you do. forexfactory.com. And every single day, every single week, every single month, they have all of the important economic announcements happening. They tell you exactly what time it happens, the time and date. They tell you what currency it's going to be affecting. They tell you exactly what the issue is, what is the indicator, what is the announcement, what's happening. They tell you the forecast as to what they think is going to happen. They tell you the previous number, the last time that indicator was released. And then when the actual time comes, the actual number pops up in this website. For example, tomorrow morning, Friday, February 6th, at 6:30 a.m. tomorrow morning, they are releasing the building permits for the Canadian dollar, the employment change numbers for the Canadian dollar, the unemployment rate for the Canadian dollar. Here in the U.S., the non-farm employment change numbers and the unemployment rate. And yes, those are 2 different separate indicators there, the non-farm employment change and the unemployment rate. Now you see, for example, let's look at the U.S. dollar. The unemployment rate, they're forecasting at 5.6%. Now, tomorrow morning at 6:30 a.m., the actual number will pop in here on this website. And I'll be able to see it, and I'll be able to trade that live. And yes, I'll be trading that live with some of our students tomorrow morning at 6:30. They're going to be watching my charts, watching me trade live, and following along on their own accounts, whether it's demo or their own money. So that you're never alone in our program. We want you to be independent, sure, but you're never alone. You have lifetime support and coaching in our program. And that's very important to us, because we don't just take your money and leave you on your own, give you a bunch of homework and say, okay, good luck to you. No, that's not how you become a trader. You better have somebody you can count on and that's going to be there, that has experience and can hold your hand and look over your shoulder and help you become the trader you want to be. That's just the only way we know how to do it. The only way we believe to do it is the best thing for our clients. So, 6:30 a.m., I'll be online here with our students, and I'll be trading live, trading that news. And you better understand how to interpret that news and how to apply it to your trades. Super, super important. Now, I probably won't trade this Australian news coming out here in 7 minutes because the Australian pairs can be extremely volatile. And if this was an indicator with a number and a forecast, I might be tempted to trade it. But because they're releasing their monetary policy statement, which is basically a speech and a document I'm going to have to read through, that doesn't really lend itself for me doing that in a live environment right now on a webinar. Okay, I would do it with our in-house students, yes, but in a webinar, no, where I'm trying to teach basic concepts. Because I'm going to have to go in here and read the statement, interpret it, and be able to react a little bit quicker than I can right now doing a webinar. But we do that in our live sessions with our students. Okay, but I'll take a look at it, and if I see a decent trade here, I might do it. I have 6 minutes to decide. But let's go back to support and resistance here. So again, here you're looking at a live chart, the Australian dollar versus the Canadian dollar. Now these lines here, these four red lines, these are all lines that I personally put into this chart. These are lines, you guessed it, of support and resistance. Now you'll notice I said that prices seek out historical levels time and time again. And that's absolutely true. Look, over here, this red line here was support. Support there, and look, way over here now, a week later, the same exact line is now acting as resistance. Over here, this bottom line is acting as resistance there, resistance here, and now it's acting as support. You see that time and time again in live charts. You have to know where to put your correct lines to help you identify where to get into trades. Okay. Now, if I'm looking at the euro dollar sure gave up a lot today. Okay, let's look at the Aussie US dollar now. Clearly, we're rotating around resistance level right here at 0.78050. So we're having a hard time getting over this level here. Very hard time. Now, I'm not going to get into detail on these indicators. There are other lines here, but this red line here is a long-term moving average, and it acts as support and resistance about 85% of the time. Very strong support and resistance. And we go into detail about that in our private sessions. Now, right now, I would count this moving average as support down here. If this current price, this black box here, fell down to this red line, I would expect it to bounce back up. This is a very, very powerful indicator here, this long-term moving average. So I don't see a trade there. On the Euro Australian, look at that. We're bumping right up against resistance here, resistance there. Over here, it was support. Prices seek out historical levels time and time again. Over here, we have resistance, this line here. Over here, it was resistance for a very long time until it was support over here. Okay. So on this one, we might have a trade. I could be interested in that. I'll take a look at it here. Before we do that, let's look at the Aussie yen. Very clear consolidation, yes? We consolidated all through here before the big move on the rate cut on Tuesday. And now we're just consolidating back in the same exact range we were on Monday. So this big box here was Monday, consolidation all the way through. And now we're back in that same exact level on Thursday with a serious amount of consolidation there. Now, let me take a quick minute here and see if I like any trades at all here. And obviously, I'm not telling you the details as to what I'm looking at, but my yellow line, my blue line, my red line, and my dotted red line down here tell me exactly if I'm looking to buy or sell. And then support and resistance tell me when I want to buy and sell. Like I said, it's a very simple and elegant system we teach our students, but there is some complexity to it that you have to understand. That obviously I'm not going to get into here on a webinar, but we get into extreme detail with our private coaching students. Now, Aussie Canadian, interesting. I don't see anything I'm too terribly comfortable with there. Aussie US, I don't see anything I'm too terribly comfortable with there. Aussie yen, just a whole lot of consolidation there. Euro Aussie, a little bit, but still not enough for me to pull the trigger here. So I don't believe I'm going to get a trade on this, but I am going to stick with you here. Now again, we target high probability trades with our students. I don't want our students shooting for grand slam home run trades. I don't want that. Why? Because you're taking on too much risk. I want, to use a baseball analogy, a bunch of singles and doubles. Small, consistent, sustainable profits. Again, our target is at 80 to 85% win ratio. If you can hit that consistently, you will be a very, very happy trader. Of course, you're going to have losing trades. It happens to the best of us. You'll never hear me say, oh yeah, I have a 100% win ratio. No, I don't. But I have a pretty darn good win ratio, absolutely. And I know exactly why things are happening. And if you can hit that consistent number, and if you can limit your losses, oh my goodness, trading can be a wonderful way to, like I said, add supplementary income or even full-time income. Now, my main goal for my students is, 20 pips per day. That is a reasonable, sustainable goal. Okay, it's 5:30, the news is out. Let's see if we get a big move here. So right now, all over the world, a bunch of investment bankers and hedge funds and investment management firms are scouring the RBA website to review their meeting minutes there. And you'll see here in a couple of minutes here if they have anything good or bad to say. We'll see some big jumps here. If they don't have anything bad to say or good to say, we won't see much. Okay, looks like it's going down pretty good now. So that means that there's probably good news. Look at that thing go. There's probably good news in that report. Now, like I said, it could be volatile, so it wouldn't surprise me for this to move the other direction too. But getting back to what I was saying, 20 pips per day. That's all it takes to make life-changing money. Okay, and it's not an exaggeration. If you can average 20 pips per day, that's about 400 pips per month. And if you're risking $10 per pip, my goodness, oh my goodness, that's $4,000 a month extra money with realistic shot to achieve that. 20 pips per day is not some pie in the sky, oh, you'll never hit that number. And I see other, and I'm not here to bash any other firms, education or otherwise, but they're saying, hey, come with us. We can guarantee you 100 pips per day or 1,000 pips per month. And that's nonsense, gang. That's nonsense. I'm not saying it doesn't happen, because you can make some extremely big money in trading, but that's a very extremely small percentage of traders that can hit those numbers consistently. It just is. But if you can honestly hit 20 pips per day, a person who works hard and studies and learns and is coachable, that's a realistic goal that can turn into life-changing money. So, I mean, $4,000 a month, that's more than most people make here in the States. That's well above the median income here in the US. And that's a realistic goal just by understanding the news, understanding how to trade, and working hard at it. All right? Nothing comes easy. This is not get rich quick. So you see, as I said, what happened? But what would happen? I said if this thing comes down to this long-term moving average, it's going to bounce right off of it. And sure enough, what's happening? It's having a hard time getting below it. Let's take a look at the Australian dollar, Canadian dollar. Okay, that's moving up pretty darn good there. It broke above my resistance line there. But again, it's having a hard time getting above my long-term resistance here, isn't it? Take a look at the Australian dollar, US dollar. Oh boy, now that's a nice move. That's a nice move. Now I'm regretting not trading this. But that's okay. Didn't have time to do my proper analysis because I'm doing a webinar. That is okay. Better safe than sorry. Now, if that's happening, then I'm imagining the Aussie yen is going up too. And sure enough, look at that. Okay. Now, this is all from one news announcement coming out. It's giving us an opportunity. In fact, this one I'm looking at here, this one would have already given us our 20 pips per day on that one trade. And it's been, what, about 3 minutes? So just that one move alone and identifying that one move could have given us all we needed to make in one day, in 3 minutes. Now, of course, I don't want to make this sound like it's oversimplified because it's not. And you're all seeing the benefit of my knowledge right now played out live. So this is very important stuff, gang. Very, very important. In fact, we can go in here and look and actually go to the RBA website and we can read exactly what's being said in those meetings, statements on monetary policy right here. Now I'll read through it and call out some of the important things here. I'll go to the economic outlook one. Bear with me here. I'm just going to scan through it. I don't expect you to read this. I'll just call out the big parts of it to you there. Interesting. So basically what they're saying here is that from a domestic standpoint, they are seeing that their rate cut a couple of days ago should keep inflation in check. And they're seeing forecasts for their GDP growth, GDP standing for gross domestic product, which is basically the entire value of all goods and services produced in Australia. So they're seeing some growth in that, but it could be a bit slower than what they were expecting that growth to be. Boy, oh boy, this has been a really nice trade here. Now we're up 40 pips on this one trade here. 40 pips, gang, in 5 minutes now. And this is across every Australian pair. So this is how you trade. This is how you trade with intelligence, with technical analysis, and understanding exactly when things are happening and how to take advantage of them. All right. Whew, boy, we covered a lot there in 35 minutes. Once again, gang, if you have any questions at all, I see Topher logged in here. Hello, Topher. Good to see you. If anyone has any questions, I'm going to type in my phone number here. If you have any questions about what you just saw on the Australian dollar trade, or any questions about what we covered in support and resistance, feel free to call me. Now I am, this is what I do every day. I'm a trader. I'm what's called a prop trader, proprietary trader. So I do trade money all day long, as well as coaching all day long. It's what I love. It's what I live. It's what I eat. It's what I sleep. It's what I breathe. I love this stuff. I've loved it since college and undergrad and my MBA. This is what I love to do. And I love to teach people how to take control of their financial future. And you will have learned skills that can help you become financially independent for the rest of your life. Okay? Again, certainly can't guarantee anybody anything, except I can guarantee you your knowledge level will expand exponentially. And we'll work hard together every single day to achieve your trading goals. That is what I can guarantee to you. So I hope you learned something tonight. I hope you appreciated what you came across here tonight. I know you have many ways to spend your evenings, and I'm glad to see you taking a chance to learn something new that can potentially help your financial situation, and education you can pass on to your loved ones to help them in these uncertain times and uncertain future. So there aren't any more questions here. I'll hang on the line for a few more minutes here, but I'm going to end the webinar there, and thank you for your time very much. And we will see you again next Tuesday. We do this twice a week, every Tuesday evening and every Thursday evening. Well, I'll be covering an intro level topic on Forex. And of course, we want you to join us as a private client where we can get into detail and help you along the way. So I appreciate your time tonight. Feel free to give me a call whenever you need to, and I hope to see you down the line. Again, I'll stay on the line here, but I'm going to stop the screen, but I'll still stay on if you have any questions. Thank you so much. Have a great evening.